Hello, everybody. I'm your host, Jedi Hill, where we like to talk about how building freedom, because, I'm working on my new Atlantis project where, we're actually working on building free independent countries. Today's special guest is a money man. He's been in the markets. He's been through the prior crashes. And, I'm love working with him some and know he can help out a lot of people. This is Rick Rucker, CEO of Equity Capital Mortgage Group. Thank you so much for being on today there, Rick.
Thank you very much for inviting me. Again, a good friend of ours and another freedom fighter. Jedi's a long-term friend of not just myself, but my entire team. He's very supportive of us, and we appreciate him and his wife are very supportive of our movement and everything we're trying to do as a minority-owned mortgage company. Jedi's always trying to refer us business and. He represents what we represent, which is, let's do business together. Let's cut through the BS.
Oh yeah, and some of the programs, like y'all know I'm in the multifamily space and more commercial, and some of the programs you guys have for up to the 29 units for the debt service coverage ratio is just like 2006 stuff, and it's insane.
Yeah, and we can actually now we have an outlet that will go even above the 29 units. So, I kind of had this conversation. I was sitting at Icon, I think a couple of weekends ago, and I was just talking to Kaz and Eric over there. Great group, Icon co-work for those in the real estate space. Just great networking. And I was just telling them, I was like, I don't think people understand the gravity of what's happening, because these products haven't existed since pre-2008. And not only is it in the 1 to 4 unit, but it's also in the multifamily unit. So I just don't understand like what the logic behind people just kind of sitting on these opportunities, because even if, let's just say you don't have the liquidity, but you have the credit score, then find a partner, team up, go 50-50 or whatever you want to on the LLC, and then purchase the property. Or if you have the assets, you don't have the credit, you find a business partner. Again, in the multifamily space, the great thing about it, I'm sure Jedi can attest to this, is there's no such thing as greed. I mean, there's obviously greed because we're capitalists and we want to make money, but there's not greed in the fact where it's like, partnerships are pretty much predominantly in that space. So a lot of us partner up on those deals, multifamily, commercial, we can do all that, anything Fannie, $1 million plus non-recourse stuff we can do now. So there's not really too much in lending we can't do, but just opportunity. But
can you explain the recourse and the non-recourse for the viewers? Because not everybody's going to get some of these terms.
Yeah. The recourse thing throws a lot of people for a loop, and they come to us, looking at a 1 to 4 unit, and they're like, well, do you have non-recourse option? I laugh at them because I'm like, that's virtually non-existent. So non-recourse is essentially a loan, and ironically, the loan amount is typically going to be over $1 million for it to be non-recourse. But non-recourse essentially is you're not personally guaranteeing a mortgage or a note that you're taking out of. But again, those are typically going to be $1 million plus properties, because the bank's going to look at the difference between residential and commercial is, in the commercial space, the property, the asset is what they care about the most. You're kind of in the background based on, based on your credit score. They are going to look how you manage credit in general, but in the commercial space or the multifamily space, essentially they're going to look at the asset and the cash flows of the asset. So the reason why non-recourse is attractive to both, an investor as well as a lender, is because if you default in the commercial space, they just take the property and the cash flows that belong to it. And a lot of times, when squeezes happen, which we know inevitably we're kind of in one of those squeezes, they will just take the property back, and obviously they have that asset and the cash flows that come along with it. So banks don't really set you up to lose. I'm not really saying that, but the non-recourse is basically saying, you as an investor go buy a property. If anything happens, they can't come after you personally, versus a recourse loan, which is general 1 to 4 unit. Anything under $1 million, you're typically always going to have recourse, meaning like there's going to be a personal guarantee attached to it. So great question.
Which is huge for people because, like, that's how BlackRock and all these things is like they can let go of one or two properties that are no longer producing, especially in like the office space where,
Yeah.
they lose half their renters in Cali
Yeah.
without the whole company getting brought down.
Yes, exactly. And that's the danger part about the society that we live in, and preaching to people that, remote work is the future. It's not. And if you look at the data points towards there's a finite group of people that can work efficiently at their house. But, guys like us obviously are entrepreneurs, but even myself, like I can't work remote 40 hours a week, and the average, worker can't. So, the worst thing imaginable is when the government steps in and they start saying, hey, this is the future of America. It's like, we understand capitalism better than you do. I'm a strong advocate of small government. When it comes to anything, I'm very, very much, not to talk politics, but I'm very much libertarian. Leave me alone. You do you, I'll do me. But intruding on the private sector from people who have never had a private sector job, to me is always intriguing. But I'm a young entrepreneur in my space as a mortgage lender. My average, person in my space is probably 20 years older than me. But I'm saying as a young entrepreneur, as a millennial, that the whole remote workspace is a fugazi, and it is also, to your point, crippling the market in certain states like California and such, where they're promoting it, but they're forgetting the part of guys like me have to pay bills, and that comes with people coming into the office.
Well,
So.
Absolutely. And you can't, I'm sorry, I don't care what anybody says. Like, I own my own business too. I work from home a lot, and there are distractions at home that you do not have in the office.
Exactly.
The screaming kids, everything else. You are losing productivity, and you're having a lot of them where they're working 2 and 3 jobs by just having a couple laptops set up.
Yeah, and everything's on us, like, right? Like, we as entrepreneurs, everything's on us. So, and we're admitting like, hey, maybe working remote isn't good for us, and we have to pay the bills if we're not, generating income. So let alone somebody that's like on a salary for 40 hours that, there is no way to track efficiency. I don't care what you say with somebody that works remote. It's impossible. Like, you cannot track it. There's some companies that try to track it, but generally speaking, like, there's this wave of everybody saying, oh yeah, it's great. And then all of a sudden, like, a lot of the conglomerates came out. I'm pretty sure Facebook and a few others have come out and said that it just doesn't work. And it's like, well, that's kind of common sense.
Mm-hmm. Well, you don't get the camaraderie, like, message, even with using email communication and everything else, things are lost in translation when you don't get a phone conversation or a face-to-face.
Yeah, I completely agree. And, the biggest thing, especially with the younger gen, and I put myself in that space, we like to text, we like to email, but we don't like to call. And it's actually, it bothers me because I always yell at my people to stop doing that, because we've gotten so comfortable with, you lose track of like, you lose track of like feelings when it comes to texting and email. And a lot of times, like, you can explain something way easier by just picking up the phone and have a 2-minute call. And, like I said, God bless my generation. I understand the efficiency part. Sometimes I don't want to gab away on the phone for a couple hours about a simple problem, but, we've gotten too comfortable with just texting, emailing, social media. And it's like, you got to get back to that space of being able to communicate with each other.
Well, yeah, the social skills, in-person, and you can't have freedom in life if you can't sell, if you can't market.
Correct. Yeah.
If you can't get a date with a girl, it's because you can't sell.
Exactly. And the camaraderie part, co-workers, like working together, like if you're just relying on emails and IMs, like you're never going to get it. And it's in the mortgage space, like a lot of mortgage companies are, countrywide. So it's always something that we're constantly battling, but there's nothing worse than if like the corporate office is doing the remote stuff, because, I know for a while when we were under, our parent company, they were in Michigan, we were in Ohio, we were allowed to work, they weren't. And it just caused, pandemonium in the entire state, because unfortunately, the government overreached there, and again, we don't want to overly get into politics, but the government
hold on.
overreached there.
The government overreach, that's where people get messed up. It's like, that's not politics, that's policy.
Yeah.
That's something that everybody should really know and talk about. And it's like, government does not have the right to step on that.
I 100% agree with that. That shouldn't be a left-right thing. It should be a common sense thing. And there's tens of thousands of small businesses that they absolutely destroyed, in the name of safety. But they don't look at that. They don't take that into consideration when they're talking about unemployment numbers. And as a guy that has an undergrad in accounting, and I'm probably a few classes shy of my master's in finance. It drives me crazy that people don't understand basic micro and macroeconomics.
That's not taught in high school. It should be, but it's not.
That should be taught in high school. And honestly, finance should be taught in high school. Like I said, I went all the way for an MBA in finance, and I don't even remember ever talking about mortgages. I just learned mortgages by doing it. You know what I'm saying? So, and I think that also makes us, it makes us more real as people, and it makes us more, as my team, we're able to relate to people because we all walked in to a space where, a lot of people don't understand, and I didn't understand, and all my employees, they came in from scratch. So learning the business from scratch really teaches you how to explain it better, if you ask me. So,
well, and you can relate to people because this stuff is complex stuff. Even buying a house for the average person, that's the biggest purchase they make their whole lives.
Yeah.
You have a government stated monopoly with realtors for the most part to sell properties.
Yeah.
Though there are ways around with wholesalers and direct sale by owner, but they have somebody walking their hand because they think it's too complex for the average person to understand because it's not taught in school like it should be.
Yeah. And part of government is to, I guess, some of that stuff is to try to protect jobs. But again, the biggest fear of any true capitalist is the government saying they're coming to help, in my honest professional opinion.
Oh yeah, because we're in the construction, so you're dealing with the building and the housing and stuff like that. And then, on your typical brand new house, a third of the cost is all the extra government Gestapo, mafia mob type stuff, just taking their piece from you.
Yeah. My personal favorite is, my old man's from the South Side of Chicago, and I remember when I go, I used to spend holidays and I was in Chicago all the time. And when I went up there and they were charging 8 cents for the plastic bags to dispose of them, but they still have the worst plastic bag problem. It's just, like you said, government over it. And then there's also some interesting data I've researched in terms of on the California market. There's a lot of very old laws. A lot of people are like, well, why is the cost of living so high there? There's some really old, very archaic laws set forth by government, basically stating that in many areas you can't build past a certain point or whatever. So it drives the price point to where it's out of control. Whereas, guys like us that are in Northeast Ohio, we laugh at people complaining about the price points here because, the people there don't even have a choice.
Yeah. But here, at least for your base level, most areas in Ohio, you can go to 35 feet.
Yeah.
Without any variances or anything. And if you're in the country, those rules don't even apply anyways.
Yeah. And California is so densely populated in the areas that it is. Obviously, Northern California is a little bit of a different beast, but they just have really weird, archaic rules set forth by government officials that, again, the cost of living so high there because of it's artificially created by, the government there. And obviously the people always suffer when it comes to, government oversight, if you ask my honest opinion. And that's not just here in specific states, but that's, worldwide. A lot of us like to, our political views like to impede on entire countries, but you can't blame the people because of government dictatorship, in my opinion.
Absolutely. And and they say there's only two things that are true in life: death and taxes.
Amen.
But what's funny is when you actually start to get into the tax code, as we do with this real estate, and you've got appreciation, depreciation, your interest you could write off, repairs, and it's like, that's why, certain orange-haired people or orange-skinned people, didn't want to release their tax returns because they know with real estate, on paper, it looks like you're not making any money.
Yeah, and that's all. That's always a funny topic to me. Again, indifferent of politics. My undergrad's in accounting, and I think I'm 4 classes shy of being able to sit for my CPA. So when I see the average person try to dissect, again, whatever president or politician tries to dissect the tax return, it's painful to watch for me because I understand the tax code, I understand accounting. And I'm just like, this person should not be talking about this subject matter. And the general public, obviously we got social media now, so people are giving their input on, taxes and what people should pay and what they don't pay. And my general thing is again, I've been poor before, and I by definition, I've been wealthy. And I don't think it's a us versus them thing that they're trying to spit out to everybody. It's poor spending on their end, not us. So, if we take advantage of the tax code, then the tax code that's fully at, advantage of everybody there. And a part of, again, being a minority man in a space where, there's only one other Black owned mortgage company in the United States. The biggest thing that we preach is home ownership is the only way to create wealth, because you already mentioned it. There's tax benefits, there's appreciation. If you buy a multifamily, there's cash flow and appreciation. So, the tax code is written for people to take advantage of real estate. That's the pun. That's the, guys like Jedi and myself and a lot of our friends have created wealth solely off of just buying real estate and or financing it, which we happen to do both.
Well, we know our taxes are, people's biggest expense, and anything you can do to reduce your tax bill legally, go for it. Yeah, exactly. And people taking advantage of the tax code is not a rich or poor thing. There's folks that are in the lower socioeconomic classes that can take advantage of it too. They get tax refunds of 10 to 12,000, and there's nothing wrong with that. And I don't look down at them, for taking advantage of it, as much as I don't look down at a billionaire for taking advantage of it either. Government spending being out of control is not our problem, if you ask my honest opinion. I agree. And I'd rather, the billionaire or the wealthy individual have more of their money to put, because they're capitalists. So they're going to create more business, more jobs, which is going to raise everybody up.
Yeah. And we create, we create jobs, we create, different socioeconomic classes. I've taken people that were, in a, factory setting or whatever, and I've taught them the real estate business, and they get their first check where they're paying an applied tax rate north of 50%. And they're like, holy shit, I'm not even rich. I said, yeah, well, this is where, you start figuring out that it does, taxation to a certain part does punish, people that like to win. But to your point, we also create more avenues for us to make more revenue to, I guess, help the greater good, as they say.
We got to do what we can. And it's all about getting that personal freedom and developing it where you have the liberty to do what you want to do when you want to do it.
Right.
So you can choose the service and how you want to make the world a better place, because we're all here to serve.
Yeah. I totally agree with that. And, none of us are here without customers. None of us are here without, being free as we are in this country. I'm a very, very staunch, supporter and proud patriot of this country. My story goes, my grandfather was Irish, left my grandmother, my uncle, and my mom overseas, actually at the time in London. God forgive us, because we're Irish. I mean, we're Southern Irish at that. But all jokes aside, left my mother, uncle, grandmother over there, came over here and actually sold ice cream off the back of a bike to get his family over. And my great uncles, my uncle Noel, my uncle Leo, and my uncle Bill had already made the trek over here. So my grandfather basically slept on the floor, just selling whatever he could to get the family to come over. And then, the flip side on our father's side is I've actually walked land that was given to my family that was originally owned by their slave owners, you know what I'm saying? So we have quite an intriguing story. I mean, we feel like we represent the American dream collectively at Equity CMG, and we do our best to represent, the diversity that we're starting to see. That's already kind of always been there, but we don't really. There's a large population of like woke culture, as they call it, and woke was a cultural word that we created that a lot of corporations just took and
just destroyed it. Yes, it doesn't mean what it did 10 years ago.
Destroyed everything that it stood for, and but the problem with that is a lot of those companies also said that they couldn't find, African Americans who had master's degrees, PhDs. And I'm like, if you call me, there's probably hundreds I can rattle off, people that are overly qualified for the positions that you're looking for. So, the whole, pandering, I don't appreciate. And the whole, that we're oppressed, are we perfect as a country? Absolutely not. Are there things that happened to generations before me that were wrong? Yes, absolutely. But I don't like being told that I'm oppressed, because clearly I'm not. I'm in a 3,500 square foot office. Eventually we're going to try to buy the building that we're in. We have 9 employees. We'll probably close north of $100 million in mortgage-backed securities. So don't speak for me.
Well, that's the whole thing. It's the haves versus the have-nots, and trying to keep people to just do that, because it keeps the victim mentality on them, as opposed to taking personal responsibility. It's like, yeah, we all know the system's stacked against us. It's stacked against every one of us.
Yeah.
To succeed, because they don't teach you They don't even tell you the rules of the game.
Yeah. And a lot of times, they just don't hear the positive stories, which, if you follow me on social media, I'm always talking about, the young African-American kid who got, 12 PhDs at 18. I'm always talking about the positive light, like a lot of outlets. I don't want to say media, because I do a podcast on radio. That's a media outlet to me. But a lot of media likes to portray this specific, image of us. And a lot of us are business owners. A lot of us own real estate. A lot of us are very successful in business, but, they tend to focus in on, music and sports. And we're so much more than that. So when I get asked to do these type of podcasts, the biggest thing I like getting on is saying, we're also, a lot of our community looks to people like us as well to show that, hey, you don't just have to do the sport. And I'm a sports guy, don't get me wrong. Like everybody predicted I was going to go to the NFL until I injured myself. I worked in music before, music entertainment. You represent, or you say some of the biggest names like 50 Cent and Akons. I have, business relationship with, or Bone Thugs and Army, ironically.
Yeah, you just had them at your event here a couple months ago.
Yeah, exactly. So, we're working with a lot of people in our space, not just, real estate people, but people that come from the music and sports arena, because we want to teach them how to create that residual income. And really, all you hear about is, 85% bankruptcy rates, but a lot of times that's just because they've been taken advantage of and they haven't met with somebody like myself, my sister Maya, or Jelani, or Leroy, or Puma, or any of these guys or folks that work for me that can teach people how to create residual wealth. And I'm a guy, I like to wear Jordans. I got a LL Cool J shirt on, like I wear necklaces every now and then, but I'm also smart enough to know that, I get no money out of what I'm buying, that's a depreciating asset versus buying, a piece of real estate, like I said, either in the commercial space or residential. And like I said, a lot of it is just mentality because, redlining and reverse redlining does exist, and we actually are the antithesis to that. And we are the freedom fighters for everybody that's, we have a service industry event night that's coming up for those that have worked in the service industry. I DJ'd for years. I worked in music and entertainment. So we're just here to fight for the little guy against the big banks and say, if you sit down with us, if you follow our path, if you listen to us, again, if you're in that lower socioeconomic class and you get a $10,000 or $12,000 check, we don't want you going to Walmart because Walmart already inevitably knows that. I hate to use businesses here, but around tax time, we won't even say Walmart, but in general, there's massive companies that specifically target for those that are getting a big tax refund. And we want to say, hey, how about you hold half of that? We help you get a 2 to 4 unit property. You start creating appreciation cash flows for yourself, and then you can go buy whatever you want based on that. Like, that is kind of what we really focus in on. And again, we work with the most experienced investor to the first time home buyer. You don't have to feel embarrassed if you've been through some credit challenging parts. I mean, I lost a lot in 2008 personally. To your point, I have been in the business since 2005 and goes north of 7,000 transactions. And we're just here as real people, fighting for the little guy.
Well, and the education and helping them, like hitting them, like, don't spend your tax return check on new TVs and other depreciating things that you're just going to have to sell when money gets tight anyways.
Yeah, it's all a gimmick, and it's all, unfortunately, like I said, in very specific areas, they specifically target us culturally because, and these retail giants know this, that, hey, they're going to get their tax return, like, let's capitalize on it. But we're trying to sneak in the back door and say, halt, don't spend that money on that. We need to spend that on real estate.
Yeah, because if we just flip the script, and that's what we taught the younger generation, just to hell with the single family home, only do multi. You could take the Cleveland and other areas, get the young people, you get one, and within a generation, we have secured and we've eliminated the lower socioeconomic class just by raising them up through education.
Yeah, education is key. I mean, I was doing some studying this weekend, and specifically about, our target market, again, is women, minorities, millennials, Gen Zers, and investors. That's kind of what we focus in on. And millennials specifically, they're the most educated, the highest paid, class, but they're also 45% minorities. And, the whole mantra that they're trying to tell us that, it's oppressed, we're this, we're that. It's like, no, that if you look at them as a whole, collectively, they make the most amount of money. They're the most educated, group. And by them, I mean we, because I'm 1981, so technically I'm a millennial.
82 here, so right there with you.
So we're right in that realm, but we're on the tail end where we got a little, we had it before social media, and we were able to go out and just hang out with our friends and weren't being babysat by an iPad.
That 80 to 84 group I found with people when I run into them, it's really neat. We're the ones that can use technology without completely being absorbed into it. We can put it down and walk away.
Yeah, we can put it down, we can walk away, we can think for ourselves. We don't get too wound up with what people are putting on social media. But like I said, the millennial generation, 45% minority, well educated, makes good money, blah blah blah. They're still looking for 2008 to happen, and we're kind of telling them, like, 2008 is probably not ever going to happen again because there's an inventory shortage. And then the flip side is a lot of boomers are downsizing. A lot of boomers, unfortunately, are passing away. So the inventory problem is going to fix itself, and there is no imminent crash that we're seeing. There's not 9 million arms readjusting, et cetera, et cetera. So very passionate about, telling our generation that, it's the best time to buy is now, beyond a shadow of a doubt.
Well, yeah, well, especially like with what I was just saying before our call about Jamie Dimon, CEO of JP Morgan, they're saying, the Fed funds rate will probably hit 6 or 7%.
Yeah.
So now's the time to buy something and lock in the rate before it goes up higher.
Yeah, it was like when we were at, the event at our Investor Source event, and I had everybody say, "Fuck interest rates," like, because interest rates in the long run don't matter. We know statistically, there's a sizable percentage of people that are going to refinance within the first 24 to 36 months. You look like a genius, and you heard it here first. You go out and buy these packages. Yes, the DSCR rates may be in the 8% range. But, guess what happens when the rate comes down in another year or so, when the actual recession is acknowledged, that rate's going to probably drop down another 2 or 3%. So, and you look like a genius with your cash flow. So we are always a proponent of take action now. Don't wait for the perfect time. Don't listen to the people that don't own real estate. Don't listen to the people that may not be successful in the realm that they are. Because they'll try to talk you out of it with negativity and the headlines, God forbid, and some of these, some of the headlines that I see are from, American Banker, Housing Wire, blah, blah, blah. They've kind of like turned it into themselves like a little like hysteria. And I'm like, guys, we gotta do better, and we got to be more responsible as people that are in this space, of not collapsing in and making it sound like there's some, catastrophic event happening in real estate, because we're not seeing it. You know what I'm saying? My sister this month.
Not in the residential, no. Like you're starting to see it in some of the commercial, especially in the office space and stuff.
Yeah, there's a lot of people that bought with cheap money that have to refinance and they can't, or if they refinance, their cash flows are underwater.
Mm-hmm.
So
yeah, you see that. But the other thing I get at is like, okay, say there is, because we never know what's going to happen, but say there is a crash in another year or two. Only the people who are buying stuff now and are actually having cash flow will the banks lend to in the future when you have a credit crunch.
Yeah.
So if you try and wait till the prices come down, the bank ain't going to lend you anyways because you don't already own stuff.
Yeah, exactly. And the thing about DSCR is typically you have to have at least one property anyway. So, and the more properties you have, the more attractive you are to them, the lower your rate's going to be anyway. So now's the time to buy, guys. DSCR, debt service coverage ratio. If you got a lease that meets what your debts are on the property, then you can buy it. It's a 1-to-1 ratio right now, even with the higher rates. And some of those have interest only options, so you don't even have to pay your full principal and interest for the first 10 years. None of them are ARMs. We don't sell ARMs, adjustable rate mortgages. A lot of people ask us about that. Like I said, I was in the business when those ARMs did readjust and they messed up the market. So, I don't personally believe in the product myself. I mean, in theory, very specific clients that are going to move out eventually, or very specific clients that understand how ARMs work. Do they make sense? Yes. But for the most part, I mean, we sell like fixed 30-year, and actually on the interest only options, a lot of them are 40-year AMs with a 10-year interest only. But, if you get an interest only option, I think it makes sense as an investor.
That's huge. And what you just said, people, you need to pay attention to that. That's 10 years interest only. So it doesn't matter what the Fed and everything's going to do. You're going to be into the next cycle, and you can pick when your time to refinance is over that 10 years.
Yeah, exactly. Yep. And then, in the commercial space, in the 1-to-4, there are typically no prepayment penalties, at least in the state of Ohio. I'm not speaking for everybody else. State of Ohio actually will not allow for prepayment penalties on the 1-to-4 units. But the commercial space does typically have a prepayment penalty of at least 1 to 3 years. It depends on the lender. And again, it also depends, to Jedi's point, it depends on your experience. So the more experience you have, the looser the bank is going to, govern what you're doing. And like I said, these DSCR products are pre-2008 because these are the products that they should have kept alive, before we opened it up to Joe Schmo, the guy that, went out and way overbought than he should have. Like, the DSCR product was for a smart investor that could look at a property, assess its cash flow, and say, okay, this thing is actually cash flowing. It makes sense for me to purchase it. I don't claim a lot on my taxes, to your point, like a lot of real estate or self-respecting business owners don't. The DSCR product was made for that client. The negative amortization was made for somebody that bought a property and a tenant moves out. You know, you don't have to make the fully amortized payment. Now, do I agree with negative AM loans? Not really, because that's under the assumption that the market was going to keep appreciating, which we know that that never happens. The market will always be cyclical. But a lot of these products were just created specifically for investors, self-employed clients, and we just opened it up to everybody. And people wonder why, you know, the rug fell out. And the other part is a lot of people like to blame, you know, specific parties, but, you know, the mortgage brokers were just selling the products that Fannie and Freddie were allowing us to sell. So, you know, that whole bullshit of everything was on us. It was like that. You guys told half the story there. You know, we were all, I'm not saying, you know, we all weren't at fault when it came to it, but, you know, we were just selling the products that were available. We weren't, you know, doing anything that was out of the norm.
Well, yeah, you were playing by the rule book you were given. They changed the rules, you play by new rules.
Exactly.
And for that debt service coverage ratio, give you guys easy numbers for it. You know, say you have a 10 grand NOI, which is your net operating income, which is your income minus expenses, not counting the mortgage. And well, say 12 grand, make the number simple. So that gets you $1,000 a month net operating income. They'll go up to 1.0, which means if the mortgage is under $1,000 and you're positive cash flow, even $1, they're going to lend it to you.
Yeah, and in some cases, with a more experienced investor, we can go down to 0.75. So, and the only reason why they're doing that is because rates are higher, and they know inevitably rates are going to fall back down.
Oh, that just blows my mind. It could, only way I could personally see doing that one is for the 0.75, because you're negative cash flow then.
Yeah.
If it's one that like half the building needs rehabbed, so half your units are empty and you got it for a hell of a deal.
Yeah, well, like I said, I think in general speaking, the non-QM DSCR market is just hedging on rates coming back down. So that's why they kind of look at the 0.75. I think it's a subjective position. I mean, everybody's not going to get approved for it, but again, this is a better managed market. Like everybody wants to keep talking about another 2008 happening. And it's like, it's not going to happen. Like I have a license, I go through federal background checks, credit reports. Everybody that works for me goes through that. Even my processor's licensed loan officer, he goes through the same thing. We go through continuing education. Like it's a nonstop underwriters are now licensed. So there's no like taking $100 million of mortgage-backed securities and selling it right to Wall Street anymore. Like they really scrutinize everything that we're doing, even in the commercial space. So
yeah, there's lots of paperwork, to say the least.
Yeah, and unfortunately, you know, a lot of people are upset or complain about it, but we're like, hey, you know, we agree with you. Like, again, some of the government oversight I do agree with. I do agree with the licensing system. I do think that sometimes they deter people that could come in and really help the industry, though, because it is a tough test. It's a law test. You know, I do agree with like some of the oversight, but some of the redundant paperwork that you sign, you know, those 80, 90 documents, like, I mean, sometimes you look at it, it's funny because it's the same, you'll see 3 or 4 of the same documents and you're just like, who thought this idea up? But, you know, that's one of those, you know, 5,000 page,
triplicate, blah, blah, blah.
the 5,000 page, laws that have been passed. So, you know.
So where do you see the market heading and where do you recommend people go?
That's a great question. So you did mention it, and it, you know, I mean, Marcus and Millichap is a good friend of ours, Chris Litzler, and I get like their updates on the market. I'm really in tune to not just, I think if you're in the mortgage space, you really have to pay attention to the rental market. You have to pay attention to the normal conventional market. You have to pay attention to the commercial market, and you have to pay attention to the multifamily space. I think, to your point, Jedi, that there's a lot of people that took cheap money and over the next 12 to 24 months are really going to feel the squeeze. I think there's going to be a lot of notes called, this is all commercial multifamily, nothing to do with 1 to 4. I think there's going to be some opportunities there for people who think smart. You know, if we're looking at commercial deals, we're typically assessing it at about $50 a square foot for like a true commercial deal. When it comes to the multifamily, it depends on like if you're doing value adds or whatever. But like I said, I think that there's going to be a lot of opportunity in the multifamily space. I know that there's a lot of opportunity in a 1 to 4 unit with the DSCR product, because there's a lot of hedge funds that are liquidating all their cash, or liquidating a lot of their real estate to increase their cash position. So we're getting 18, 20, 30 deal properties, single family residences, 1 to 4 unit, whatever, that are coming across our desk, and we're helping investors like Jedi or people that come to Investor Source, buy up these deals. So if you're looking for a residential market crash, it ain't going to happen because there's still an inventory problem. If you're looking for a market crash in the multifamily and the commercial space, I think that will, I don't like predicting crashes because I don't like predicting anybody losing money, but I do think that you're going to definitely see a squeeze in the commercial market within the next, like I said, 12 to 24 months, if not sooner.
Well, and the key is you make your money when you buy, and buy smart.
Yeah.
Make sure it cash flows, because if it cash flows, you can weather any storm. Yeah.
And everybody looks like a guru when rates are cheap, and my buddy Steve Mort, Bulletproof Cartel, he has his little group or whatever. He said everybody, some of these guys have disappeared off of the planet Earth once rates went up, and it's because they didn't know how to do financials, they didn't know how to assess deals, they didn't know how to factor in rates changing. Like there's a lot of people that were charging people a couple $1,000 to come listen to them speak, and they weren't even either doing the deals or B, doing them successfully. So be careful of the gurus that you look to. Some of the guys that I look to are like the Mark Evans and the Big DM, and Sean Whalen, I think, does some real estate stuff, and I'm trying to think. Investor Source is obviously a good one. Women who invest in real estate. My buddy Adam at Local Real Estate has a great event. Darian Thomas has a great real estate invest. Like these are all things that we co-sign because we really get tired of clients getting burned by going to people that claim that they're gurus, and they're really not. And they're not even doing the deals, which is the most perplexing part. Like I don't understand how you could pay a coach, to teach you that's actually not doing the business.
It gets funny for sure. And a lot of people, that's going to be an interesting one, is they're not calculating in the increased taxes from the property values going up so quickly that last couple of years.
Yeah, you gotta, you really gotta focus in on and understand your cash flows. And again, you're speaking to an accounting nerd. My old man was a PhD in accounting, so I grew up. I don't know if anybody's seen The Men Who Built America, but where I think J.P. Morgan was with his father, and his father was like standing over him and teaching him in the old ways of like doing the manual accounting. That was kind of my old man. So I learned numbers at a very young age, and a lot of people need to sharpen their pencils, and I mean, maybe even go back to school. Like, if you're a real estate person that's getting crushed in the market, I mean, maybe you should just go back to, take some basic accounting classes, like, know what you're doing. And again, we got crushed in the mortgage side. There was guys, good friends of mine that went to zero, and, they won't be opening up their mortgage company again, because when that market switches, like, you got to find money that sometimes you didn't know existed, and a lot of us that weathered the storm in 2022, which we had nothing to do with. Literally, we had a Federal Reserve that was just giving people more mixed signals, and we had crushing inflation, and we had rates increase 3 or 4%, overnight. That crushes our bottom line, because the mortgage-backed, security market, they're not going to pay a premium for a mortgage they know that's going to inevitably get refinanced when rates come back down. So, margins sank for most mortgage companies 60-70% in 2022. And it was tough, and like I said, if I didn't have the accounting background, if I didn't have the finance background, if I didn't come from the school of hard knocks, where, I had a grandfather who sold ice cream off the back of a bike, or, my
and that is personal responsibility, taking care of your family. That's what these young kids need to learn.
Yeah. You got to take care of your family. Like I take the people that work for me very serious. We're, family oriented environment, keeping employees employed, making sure their bills are paid for. Can a lot of people sit there for 12 to 14 months and not just make money, but lose money trying to keep the doors open. No, a lot of people aren't built for that, but I'm built Ford tough, as they say.
Hey, and we have a Ford factory in Cleveland, so.
Yeah, I'm a very big American automaker guy. Like, I think I studied many of those guys, especially Henry Ford and some of those guys that created American capitalism. And a lot of us, businessmen now owe them everything. I mean, Rockefeller hangs on my wall, Carnegie hangs on my wall. Those are some of my personal idols. Me being a member of the Union Club and going down there and thinking of John D. Rockefeller sitting up there just looking down at me, like, that's the stuff I thrive off of. I'm a big history buff, and
he actually did a lot right here in the Cleveland market when he first got going.
Tons of stuff in the Cleveland market, tons of stuff. So, and Madam C.J. Walker, you as a minority person, a lot of us don't realize like how many multi-millionaires there were at the turn of the century. We're talking about early 1900s that were African American, and like I said, it's 120-ish years later, and you can't talk about the man when we've already had people that broke through that ceiling literally at the turn of the century in the 1900s. So the opportunities out there. Again, I think that we need to have more conversations like this, where we really talk about and promote people that aren't just doing the music or the entertainment thing or the sports thing, which are all passions of mine. But there's a lot of us that are successful business people, like myself. So.
Well, yeah, and this is like, they might look at people like yourself, say you got lucky. Well, it's like, no. You don't know the definition of luck.
Yeah.
It's when preparation meets opportunity, and we live in the land of opportunity.
Correct. There's no greater country, and if you don't believe that, go to a third world country. A lot of people are like, I'm going to move out of this country. I was like, listen, I can tell you, I've traveled to different countries. Like, you're full of shit, because the opportunity we have here is like bar none the greatest that, I've taken people out of, making $30,000 a year to, they're making that in a check, you know what I'm saying? And they're like, wow, this is how American capitalism works. It can work for everybody. It's just a matter of your mindset. And to your point, like, my mindset has always been to win. Like, my entire life, I've always wanted to win. I looked up to my older sister, who was very competitive as I was. We're both very competitive. She started her own group, Women Who Invest in Real Estate, Investor Source CLE. These are two of the big, real estate related functions. And it's just because we're competitive and we want to win, you know what I'm saying? Mm-hmm. And if you come to my team, like, I expect it.
And you do have a great team, and Jelani, Maya, the whole group with you there that can help out. So what's a good way for them to get a hold of you in the Equity Capital Mortgage Group?
That's a great question. So you can get a hold of me. You can call me on my cell. I'm always available, 216-288-8642, or go to rickrucker.com or go to equitycmg.com. You can see the entire team there. Investor Source CLE is a great event every first Thursday at at Icon Co-work in Lakewood, Ohio. My sister has an event actually tomorrow, Women Who Invest in Real Estate. Great function. Jedi's a big supporter of that, which we appreciate. But we're out and about. Like I said, we have a service industry night we're going to do. My good friends over at Conrad Mortgage. Contrary to popular belief, like, a lot of us mortgage guys have been around, are actually friends behind closed doors. So we're doing an event down at Strongsville the end of June. It's a Monday, again, for service industry employees. Like I said, the opportunity is here, folks, and it's just a matter of, are you going to take advantage of it, or are you going to listen to the person that's been losing their entire life, or get with winning people like myself or my team that will show you how to win.
Yes, Robert Kiyosaki says you got to find real teachers, not fake teachers. You got to find people that have actually done or are doing what you want to achieve.
Yeah, done or doing, and come from your background. Like I said, I come from a single parent household. I was born in East Cleveland. Like, we lived off in the hood and on the west side. Like, I come from that background, but I was blessed enough to go to college and come out of that. But I got tattoos. Like, I like loud music. I DJ at our events. So, like, I'm just a normal person that became successful, and it's just because I'm persistent and I don't give up.
Persistence and the personal responsibility. Well, thank you so much, Rick, for coming on. Make sure y'all check him out at the Equity Capital Group. That was equitycmg.com.
You got it.
So thank y'all. This is Jedi. Make sure you like and subscribe. Enjoy your day.
Peace out.